strategist at Southeast Asia's largest bank DBS says Bitcoin is unique regardless of price. An investment strategist at Southeast Asia's largest bank, DBS, says Bitcoin is unique whether the price changes or not. If we just look purely on a price basis, DBS investment strategist Daryl Ho talked about Bitcoin in a recent media briefing, Finews Asia reported Friday. He explained, if we just look purely on a price basis, you will see a lot of volatility and that doesn't inform you a lot about what benefits it actually brings. Elaborating, most of the methods by which you trade assets require a central clearing party to verify the trade. Ho detailed
is really something very special. I think this is seminal in many ways. So thank you all for being here. Thank you for participating and being part of a process of making history. In my comments, I'm going to focus on two things. First, I thought I'd touch briefly on recapping how CIX came to be. And second, then talk a little bit about CIX's value proposition. What is it that we're really trying to do? So on the first, how CIX came to be, a year ago, the Singapore government launched something called the Emerging Stronger Task Force to think about possibilities of a post-COVID world, opportunities not just for the country, but for the region. As members of the task force, we explored various possibilities, and it became quite clear very early that sustainability was going to be one of the biggest issues of our time, one of the biggest challenges of our time, but perhaps one of the biggest opportunities as well. It's quite clear that this transition and shift to a low carbon economic model is going to be critical for Mother Earth, for the future of this planet. But it is also equally clear that this shift is easier said than done. While changing business models is imperative, the fact that we have trillions of dollars of extant infrastructure and trillions of dollars of existing business investments means that this shift in business models is not that easy to make. It is both expensive and time consuming. As best as I know, we need to halve global emissions by 2030 from some 50 gigatons to 25 gigatons per annum. And that's not going to be entirely easy to do just by changing the business model and business mix. And therefore, I think it's imperative we start that in addition to the primary agenda of changing the business model, there is going to be a meaningful role of carbon offsets and carbon markets. In fact, I think the voluntary carbon market will play an extremely important role in being part of this transition in its own way. One of the good things is that the voluntary carbon market will provide a real opportunity for the flow of private sector monies. A lot of it is from developed countries into projects and opportunities in developing countries. Projects which not only mitigate climate change, but also serve to protect nature as well as support livelihoods and be able to do this in scale. So one of the big challenges and problems people have always talked about is how do you get the flow of money, the flow of capital from developed Western countries often to move to the South. I think the voluntary carbon markets is probably one of the best ways to do that. And this is the realization we came to in that Emerging Stronger Task Force agenda. So the reason the four shareholders came together is because we share this common vision. The ability and the role of large corporates to be able to take and bring investment to bear into carbon reduction and removal and create the right market infrastructures to allow this flow of capital to actually take place. The next, what are we trying to solve for and what makes CIX different? The fact is that this idea and knowledge that carbon offsets, carbon price, and carbon markets could be a valid part of the transition and a change in the business models of where we're going to has been accepted and known since the Kyoto Protocol. That's 1997. And yet, as you look 25 years later, the reality also is that the markets are relatively small and underdeveloped. The market size of about 200 million tons last year against what we have global demand in the next 5-7 years of 2 gigatons. So the market is not scaled and not developed. The reason the market is not developed is well known to all of you who are on this call. There have been inconsistent standards for quality. There's been a question of trust. There's been lack of verification systems, lack of rating methodologies. There's been lack of price discovery, liquidity mechanisms. So all the usual kinds of flaws that you heard of, I mean, those are true, and those are things that have come in the way of actually building out these markets to scale. Um, However, we're convinced that the time has come and the technology has come to be able to set many of these problems and put them behind us, to fix many of these problems and put them behind us. We think that by focusing on creating efficient marketplaces with layers of assurance for trusted carbon credits enabled by technology, we can create a platform which is differentiated from some things that have existed in the past, and a platform that will allow us to get this liquidity and price discovery that we're all looking to create. So how do you do that? We're hoping that CIX will prove to be an efficient marketplace, that there'll be robust participation of buyers and sellers. Like I said, we have a bunch of people on the call right now. We're trying to put together a coalition of people from around the world who will be active participants. We're hoping that the intuitive interfaces and the UX of the whole platform will just make it easy and customer friendly. We're going to try and create a whole set of innovative products, high quality, for example, this high quality nature-based portfolios. And we're going to focus very hard on assurance, on trying to make sure that trust is retained and trusted carbon credits are enabled by technology. Rich information, rigorous due diligence of all